With much gratitude to our experts, it is now time to introduce our final session of the day, which is a presentation on Building OCEN, digital rails to help drive credit penetration to MSMEs. This presentation is being delivered by Mr. Hrushikesh Mehta, Fellow of iSPIRT.
Hi, good evening, everyone. My name is Hrushi, and I'm here on behalf of iSPIRT. iSPIRT is the India Software Product Roundtable that has been responsible for building other public goods like Aadhaar, eSign, UPI, the recently launched account aggregator, which you can transfer bank statements. And I'll be walking you through today the Open Credit Enablement Network, which actually solves some of the problems that the gentlemen on the stage were talking about prior to this. Let's get right into it. So who are we trying to solve for, right? We've, for almost 2 decades, talked about for almost 2 decades, can you move to the next slide, please? We've talked about MSMEs being severely underserved in terms of access to credit. And there are a few reasons why this has happened. And can you change the slide, please? So there are 2 major reasons this has happened, and one is the cost of operations and acquisition. So one is when people are trying to acquire customers, it costs a lot of money in terms of marketing. And secondly, the operational cost that we even talked about in the session prior to this, whether it's collecting documents, then manually assessing those documents, finally doing KYC and verification, and then actually disbursing the money. It costs a lot of money, sometimes as much as 3,000 to 5,000 rupees. And when that happens, that actually increases the minimum ticket size that someone is willing to give a loan for. So as a function of which, the bottom of the pyramid gets completely left underserved. The other thing is the collections, as you heard, like people are trying to drive digital collections, but it's not completely happened yet. The other problem, especially with digital acquisition, is, if you think about the Paisa Bazaars, Bank Bazaars, and all the various banks that they have on board, everyone has a different process to sanction a loan. Everyone has a different process to integrate. And this creates a lot of friction, and it takes a lot of time to get products to market. And what you typically have is the same standard EMI-based products, which haven't really scaled past retail credit, right? So large corporations get credit, salaried people get credit, but the underserved MSMEs, small traders, are usually not served at all by the larger banks or the NBFCs, and hence they end up paying 24-36% to lenders rather than get bank rates at anywhere between 9 and 17%, right? Can you move? So the MSME suffers significantly. So what we did at iSPIRT was try to think through who are we solving for, right? So we created a protagonist, and we often use this, and her name is Rajni. And this was actually experienced while the character is fictional. In 2014, a team had actually gone out to the villages and tried to identify the hardest use case possible to solve for. And what Rajni is she's a vegetable vendor in a small village in India, and then she has access to a smartphone and the internet. And the idea is to be able to get her a loan of 500 rupees at 9 in the morning and have her paid back by 5 in the evening. And it should be profitable for the lender to provide this loan. Because today, if it costs them 1,000 to 2,000 rupees just to acquire the customer, why would anyone give a 500 rupee loan, right? And you heard this in the session before as well. So the way we thought we'd do that is there are multiple layers that have been built over the last 5 or 7 years. Can you switch the slide? So there's the ID layer, and you heard about Aadhaar and the OTP being used, which is the first layer. The second is the payments layer, and particularly UPI. Now just think about an intraday loan where a 500 rupee loan was given, and it cost 1% each way just to send the money up and down. That's actually just 750% in interest cost right there, right? So why would the lender do this? Because, they don't make any money off a 9-hour loan then. So UPI actually solves that problem. And you've heard about the whole hullabaloo about no MDR and why is it free? Because it was built to serve the underserved and not built to serve people like us. And then the final layer is the data layer. And I'm not sure if you're familiar with the account aggregator framework, which was deployed last year in September, which actually lets you, with a few clicks, share your bank statements in digital form from your bank to whichever bank you're applying to for a loan. And it all happens in a few seconds. You can actually try this. There are a couple of apps on the Android Play Store already called FinView and OneMoney, where you can link your accounts and actually transfer money. It's very similar to UPI in construct, where you give consent to transfer money from one bank account to the other. The account aggregator allows you to do exactly the same thing, just with your bank statement data. So these were the basic building blocks to be able to underwrite. And then finally, if you can just move to the next slide. OCEN, which is the Open Credit Enablement Network, becomes the fourth layer, which ties all these pieces together to be able to give a sachet loan in under 10 minutes from the start of the user journey to money in the account, right? Now, the way to read this, the innermost circle is what Rajni has to do. The center circle is what the private market players do. And the outermost circle is what we build as public infra. And OCEN now is going to be the fourth layer of the India stack as we proceed. So what is OCEN, right? It's basically a common API protocol is one thing. So instead of having to do multiple different custom integrations, we have standardized the APIs, we have standardized the flow, and it is all obviously regulatory compliant so that everyone can use it. And the second thing it is that we've built what we call a gateway or a switch, sort of what UPI has, which sits in NPCI, where in one central place, lenders and what we call loan service providers, which I'll describe shortly, can integrate, and they don't have to ever do another integration as long as they're on the platform. As we add more lenders, they become available to the lead generator, and as the lead generator integrates, as we add more lenders, all those lenders become available as well. So it significantly reduces the cost of integration for the participants in the ecosystem. Can you switch? So whilst we wait for the slide to come up, what we've done, the participants, no, you've gone too far. The major participants are loan service providers on one side, and those are the likes of Swiggy, Zomato, Google Pay, PhonePe, Bharat Pay, Paisabazaar, Bank Bazaar, those guys. And on the other side, you have lenders. This is not the right slide here. Okay. So what we do is, you have all these MSMEs transacting, right? It could be even a Ninja card for agri-trade loans. They're transacting on these platforms, and rather to have to go to their bank or to have to go to another website to get an offer, we're like, why can't we embed these offers right where they're transacting and give the credit almost instantly, right? So what we've done, in order to do this, see, look, it's very abstract if I just talk about it. So what we've done is we've actually built a reference app with the government e-marketplace, where the government buyers actually provide purchase orders to small MSMEs, and this is live. So here's the ecosystem diagram, right? So what you have is the gateway in the middle, loan service providers on one side, and lenders on the other. And basically, if I'm transacting on the government e-marketplace and I win a PO, I can get a loan against that PO in real time, literally in under 10 minutes, right? So this is the first reference implementation that we've made. Going forward, we have also built a second one with SIDBI called GST Sahay, which now using your GST and invoice data, we can finance invoices again in real time, right? So the idea is to build these reference apps that show people what is possible to do. Now, the other really cool thing is, the guys before were talking about platform data, right? You have cooperatives that have transaction data. So we actually use GEM transaction data, which is used by the lenders, to be able to underwrite, even because that's an additional data point because it's livelihood-based, right? So these are the first two reference implementations. Can you switch the slide, please? So just like Bheem was built for UPI, We've built GEM Sahay on the government e-marketplace for purchase order financing. We've built GST Sahay with SIDBI for invoice financing, and then we will take it to the open market for multiple use cases. It could be like agri-trade financing with Ninja Cart, restaurant financing with Swiggy or Zomato, Kirana store financing for Bharat Pay, Phone Pay, Google Pay. We even have an interesting use case where the India Post Payments Bank wants to create, like very similarly, their postmen into banking correspondence. So they can become the assisted flows for people who don't have smartphones to be able to use the same digital infra that has been built. If you can just move to the next slide. So in terms of where we are, right, it's very nascent. We launched last year. We've given about 12 crores worth of loans, 3,000 loans in total, so the average ticket size is about 40,000. We have 6 lenders live, including ICICI Bank, Kotak, we have Tata Capital, a small NBFC called One-to-One Finance, Ugro, and Oxizo, which is a offshoot of Off Business. Now here's the beauty, right? You heard about needing to give sachet loans. The smallest loan given on this platform profitably is 160 rupees for 20 days. So we have already done it. Yes, we've not come down to an intraday loan, but I mean that will eventually come as a potential use case as we go forward. We've got another 9 lenders coming, and there are already 20 lenders, interested in participating in the other use cases other than GST Sahay as they come about. Can you move to the next? So finally, in terms of how are we going to roll this out, right? We have GEM Sahay live. We will keep expanding the program with GEM. GST Sahay is live with 3 loans gone out. Now we're going to add more lenders to that. Finally, we build the gateway, and then we extend this to all these private market LSP apps, right? So in addition to some of the use cases that I've described to you, we've also had the Gates Foundation come to us and say, do you think you can figure out how to do buffalo financing for dairy farming? Can we do sachet financing for microcredit completely digitally and remotely? And the answer to all of this is yes. It's just a question now of, deploying this by September and rolling this out over time. We expect this to go the UPI path, given the wide acceptance we'll eventually see. And look, there was a lot of this discussion about adoption of technology and do people have smartphones and do they have the internet? And my only submission to you is even look at our own experience. In 2006, most of us didn't even have the internet on our phones. And by 2016, you were like streaming movies while you're on the way to work. So, and that, as you've seen, even UPI adoption, right? In 3 or 4 or 5 years, you've gone from literally a handful of transactions to 10 billion in a month. So when people realize that if I can get you a loan as fast as you can send money on UPI, we know this is going to explode. The other major reason for this is as we've been testing it, there's like severe hunger. Like we've got feedback from some of the sellers on GEM that they can't believe that this is available now in India, because previously a bank wouldn't even entertain them for a 3,000 rupee loan, and now they get interest rates ranging from 10% to 17% as opposed to like 24 and 36, and this is live. This is not even hypothesis. Like Tata Capital is offering 10.95%, Kotak at 12%. These are bank rates at MSMEs who otherwise wouldn't even be entertained by bankers, right? So we are very optimistic. If there's anyone you know who'd like to participate, please send them in my direction. We're looking for participants actively. Like we've got about 25 lenders, actively integrating, and I have a list of 50 LSPs who want to participate. But the wider the network, the better it will be for everyone. So we're happy to have participation, and it's at a very, very low cost. So just so you know, this is public infrastructure like UPI. There's not going to be a massive charge to use it. It's not going to be free. That's the other major concern most private players have. You will obviously be able to charge the borrowers for this service. We took the feedback from UPI, obviously that it became free and then it became very difficult for a lot of private players to manage. That is not the design of this. We want the whole ecosystem to make money, and that's the only way it's going to flourish. So, I'm going to stop there. It's a very heavy topic. happy to take questions if you have them, or we can give you some time back. Yeah. Sorry, I can't hear you, man. Yeah.
Hi. So I understand that you provide the rails and you provide the entire infrastructure in a documented form, right? But if we were to deploy it to connect a bank with, say, a loan service provider, and I understand there's a scope for technology service providers also to participate.
That's right. Yeah.
So how would one test the system? Because you'd be creating the system on both sides, or how would the technology service provider do with it?
No,
What role you would play?
So we have empowered a few technology service providers to do that even before they had a client. So just reach out. I'll give you my email address is up there. You can take my number as well. What we'll do is we'll give you this API spec. You build something and we'll help you test it before you take it to a client. So it's really that simple.
All right, perfect. Thank you.
So the beauty of it is we're still not like a cumbersome government-run large bureaucracy yet. You'll actually just deal with me and a couple of other guys, and we'll get you up and running. We've already got at least 2 TSPs, which I know we've helped source 3 lenders for them as well. So happy to help.
Great, thank you.
Another question.
Hi Rushi, Indulan this side. My question is more on commercial aspect. You talked about the sachet loan, and the minimum ticket size of that was close to 160 rupees, right? So there is a cost of transaction for banks or NBFC, and there is a return that they are earning.
Right.
Is there a comparison or data that is available with you with respect to what is the minimum ROI that is charged by a financial institution vis-a-vis the minimum ticket size that can be funded so that it still earns for the institution?
See, one of the major challenges in the bureaus, the credit bureaus are not going to like me saying this, was the credit bureau price. So if you give a 200 rupee loan or a 160 rupee loan and you're charged 20 rupees for the bureau report, that makes no sense for you to do. So what we've done is we've actually talked to the credit bureaus and asked them to provide what you would call OCEN pricing. So for 1 year, till the volumes grow, because once the volumes grow, it goes down to rupees anyway, right? So they have agreed to do that, all the bureaus, right? Because they understand this will be a big opportunity going down in the future. So that is one major cost, but one of the other costs was Aadhaar, right? So if you're familiar with for Aadhaar e-sign, private companies had to pay $25, and about 6 to 8 months back, it was reduced to $3. So we helped do that, because otherwise, and that's our role, right? We are trying to create an ecosystem that for the private players, this makes sense to do. Otherwise, it'll never take off. So if there are other costs which you feel are difficult, please highlight them and we'll get to work, to be honest. Any other questions? Yeah.
Hi, this is Pranshu. Are we doing anything on the collection side after the loans originated? How is that thought through?
Right. So, look, the collections currently happen via an escrow account for the GEM Sahay case. For GST Sahay, it's going to be via eNACH, right? Now, for other use cases, so just hypothetically, think about Swiggy, right? So 40% of the money that goes to restaurants comes via the app. So you can create an escrow mechanism there, so that gives the lenders comfort. But see, at the end of the day, it is a lending business. The idea is to get the credit model right. And if past a point people don't pay, the cost of the mistake is small, because the average ticket size is small. And then you just don't lend to that sort of cohort again. So I know in the last session there was this discussion like, what do you do if someone doesn't collect? Yeah, you don't send thugs to their door in this case. You just don't worry about it, because it's not even worth the money to send. And the whole idea is it sort of creates discovery, and the first 2 years will be like that, where you might lose some money on the early loans, but when your credit model develops, then you'll be fine. And I'll give you a case in point. In 2004, the first bureaus launched. Till then, we'd not even get consumer durable loans. And then in 2006, Bajaj said, yeah, I'm going to be in every Chroma and every Vijay sales. And the rest is history, right? Everyone copied what they did. So everyone remembers that story in the lending environment. So everyone is at least willing to try. So like they're willing to set aside what they call a loss book, which doesn't mean they're going to lose it all, but they're willing to take higher than normal NPAs on that portfolio just to discover what the credit policy should be. Does that answer your question? Yeah. At the end of the day, there's no guarantees, right? And you hear lenders, and when lenders say they're always looking for a guarantee that the money will come back, but that by definition can't be the case, right? All right, any other questions? All right, great, thanks.